Past performance is no guarantee of future results. Content is offered for information purposes only. Unless stated otherwise, any and all individuals participating in the video are third parties that include both professional investors and individual investors who may not be licensed or certified by any institute or regulatory body. Unless stated otherwise, the views or opinions expressed may not reflect those of Seeking Alpha as a whole. The accuracy and completeness of content shared cannot be guaranteed. Seeking Alpha does not take account of your objectives or financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank. Hey everyone, this is ETF Spotlight. I'm Daniel Snyder. Today we're joined by Arne Noack from Xtrackers. So without further ado, we've got to talk about AI, big data, and critical technologies. Arne, thank you for being here. How are you doing?
Daniel, great to be here, and I'm doing really well. Looking forward to the conversation.
Yeah, so I want to dive right in. We've got two funds to cover today. The first one being all about critical technologies. Can you kind of give investors an idea of what this fund is, and what do you mean when you say critical technologies?
Absolutely. So critical technologies is a bit of a catch-all phrase for technologies that, in fact, the US government, by and large, regard as critical for the health, well-being, and future competitiveness of the United States and its economy. In this time of political transition, I should state that essentially those 14 technologies have been identified by the Department of Defense and are not a partisan topic. So there's broad consensus around the political spectrum as to the criticality of those technologies. And of course, when we dive into it, what comprises them, there shouldn't be any surprise. So of course, artificial intelligence, in particular trusted AI, is very much at the forefront, but also topics such as biotechnologies, cybersecurity, quantum computing, even sort of certain elements of the aerospace and defense industry, such as hypersonics, fall into that spectrum. So we're really talking about areas of the tech spectrum that, by and large, investors can see as being on the cutting edge of development, and artificial intelligence obviously being one of the big buzzwords of last year and obviously also of this year, is very much a firm and integral part of those critical technologies.
Yeah, so we're talking about fund here. CRTC is the ticker symbol. And I'm looking at the top 10 holdings here on Seeking Alpha. I'm seeing the Amazons, the Alphabets, Microsoft, of course, the names people are used to seeing. But then you're seeing names like Exxon, AbbVie, Chevron, Oracle, Cisco. It sounds like a lot of these are tech or energy focused. Kind of curious of like the approach here. Are we expecting to see more quantum? You mentioned quantum. Will quantum names kind of surface, or how does this kind of get constructed?
Yeah, of course. So quantum computing, whilst it is I would say very much a strong buzzword, obviously is still a very small, nascent, and relatively new area when it comes to the stock market. And typically, quantum-specific stocks are relatively small in market capitalization still, and therefore we would expect them to only represent a relatively small portion of this universe for now. But ultimately, the way the portfolio is constructed of the critical technologies ETF CRTC is it starts sort of relatively broadly. It has as a selection universe a developed market only universe. So all the large and mid-cap companies that essentially are listed across the globe in developed markets are potentially eligible. But then by and large, there's a trimming down. The first step, if you will, is a revenue-based approach that looks at, okay, how much are the companies that are potentially eligible for inclusion in the portfolio exposed in terms of revenue, in terms of business conducted to the different themes. So that narrows down the universe quite significantly. And that's, I would say, a very key step also, because often we get asked, hey, why are certain companies not included that we would expect to have included? For example, Meta, we would expect to potentially see included because they are very much a big tech company. However, there is a second screening step and that is referred to as the geostrategic risk screening. So that's a bit of a mouthful, but ultimately what it means is the following, and the concept behind it is the following. When we talk about those areas of critical technologies and critical for the United States in particular, obviously we're talking about relatively sensitive areas, and sensitive in a sense that potential politically strategic adversaries could, regard those companies as negotiation tools, or as potentially vulnerable to potentially adverse actions towards the United States. And therefore, CRTC, or the ETF, employs a risk screening process which screens out companies that have too much exposure to countries that are regarded as political or potential political adversaries to the United States. That includes Russia, that includes China, that includes North Korea and Iran. And the analysis that this ETF employs essentially screens out companies where that risk profile is regarded as too high, and focuses only on the companies that are active in the areas, but do not have the risk profile that is undue according to the screening process. And therefore, from an initial universe of potentially 1,400 companies, it's narrowed down to a portfolio of roughly 220 companies that ultimately make it into the portfolio. The weighting then is largely market capitalization weighted with some caps, but in order to ensure relatively high liquidity and tradability of the profile, it somewhat resembles a market cap weighted universe inside the portfolio.
Amazing. I'm glad you brought up the geopolitical side of things, because I think that's what everybody's really focusing on when we're talking about something that is U.S. critical infrastructure. Is things are constantly changing. The tensions are higher than ever. Tariffs are being flung around by the new administrations. People don't know what might come next. So is this screener running periodically? Is it quarterly? Is it annually? How does the screener work? And the time frame?
Absolutely. So you're very right. Essentially, in the current times, the topic of tariffs or other regulatory actions that any government may take, versus companies of another country could affect the share price. And, even the speculation around potential adverse action can affect volatility. So by and large, as the name would suggest, this type of screening is implemented as a way to mitigate such risks and act as a risk mitigant. The CRTC is and the underlying index are rebalanced quarterly. So essentially, that screening is in place continuous throughout the year and updated on a quarterly basis.
Awesome. Now we can't talk about critical infrastructure without talking about semiconductors, right? Everybody's been focused on that space. There's been all this, do we sell chips to China? Do we not sell chips? Do we keep the newest chip technology to ourselves? Where is that going to be manufactured? Is it Arizona or is it Taiwan? So how does the fund kind of approach the semiconductor space specifically, seeing that it's changing so rapidly?
Essentially, when we look at CRTC, it is a relatively broad portfolio, and should investors have the desire to narrow down on, let's say, semiconductor industry only or artificial intelligence only type of universe, we can also have a conversation about that, and I think we're about to sort of go on that journey. But by and large, semiconductors are not looked at as, let's say, special in the context of CRTC. They're one of 14 type of technologies here.
Yeah, before we talk about the big data, the AI side of that fund, one question around the critical technologies here is, when you think about critical technology and the semiconductors, which we just mentioned, there's also the aspect of aerospace and defense, right? We think about what's critical to America and the defense of America, and you think a lot about aerospace and defense. And now there's this blend of chips being put in more and more weaponry, whether it's the drones, whether it's the jets, whether it's the missiles. How does the fund approach that? Is it strictly a passive kind of systematic approach, or is there a little bit of maybe we weight aerospace and defense now that it has more chips and technology in it? Is there any sort of sense to that?
And so the weighting, in fact, is very, let's call it unemotional and very passive, very systematic. What I would say is, by nature, because we are talking about critical technologies here, the aerospace and defense segment is a little bit overweight compared to, let's say, an S&P 500 weight or Russell 1000 weight. So in the traditional sense of, sector weighting, aerospace and defense make up just over 5% of CRTC's portfolio. So I think in the normal benchmark context, that would be around about 2%. However, as you already suggest, the topic of semiconductors, but also the topic of cybersecurity often has these days a bit of an overlap to the, or let's call it has a somewhat non-traditional connotation in the defense context.
Great. I'm glad you mentioned cybersecurity. Great transition to what we're talking about next with artificial intelligence and big data, which you have an ETF for over there at Xtrackers. It is XAIX is the ticker symbol. Obviously, big data, we're all consuming more, or we're putting more data on the internet, but we're also consuming more data. And it seems like we're going to continue to live in a world full of data based off of data center build out and what's going on with AI. So what about this fund is it that investors should know about in the way that it invests within this specific theme?
The strategy that this fund implements is essentially a NASDAQ index, and it differs a little bit from other indices in the sense that, of course, there's different methodologies how you can look at the underlying stock universe and decide whether something is an AI stock or not. And let's say the traditional methodologies are on the one hand side, and similar to what I discussed before on CRTC, is a sort of revenue-oriented screening process. So essentially, you look backwards, you look at reported revenues of the companies and decide those companies are active in the different fields that encompass this bigger phrase of artificial intelligence and decide, yes, this is an AI company. Alternatively, you could rely on somewhat, let's call it less quantitative metrics and look more at qualitative metrics. So, for example, what forward-looking guidance or statements does a company's management make around the ambitions in the field of artificial intelligence? Of course, ambitions are relatively easy to be stated, sometimes not so easy to be implemented. So do you look backwards and have reliable data, or do you look forwards and have an element of, let's call it, hope? And what XAIX strives to do, and in my view makes it particularly interesting, it sort of seeks to strike a balance between the two. And the way it does so is it looks at patent filings. So rather than only looking at sort of revenue numbers, which do play an element in the screening process, in order to also have a forward-looking element in the methodology, it has a look at, okay, which patents have been filed in the field of artificial intelligence, be that natural language processing, image recognition, speech processing, and other elements. And that patent filing screening process is something that we tend to highlight in our conversations with investors that differentiate that fund from others. When you file for patents, then obviously you and especially when you have developed a certain program, then as a company to go through that process, there's a certain level of conviction that you have that this type of development is useful not only for your own purposes but also potentially for your competition, and you want to create a bit of a moat around your own usage of that. And that's kind of the area of the market that XAIX, let's say, implicitly tries to play a little bit. For example, one stock to highlight, not because I have a personal preference for that particular stock, but I think it's a very interesting story. A relatively meaningful component of XAIX is actually Bank of America, because Bank of America has quite a number of patent filings in the space of artificial intelligence out there. So Bank of America being a traditional, very much a financial stock, you wouldn't necessarily immediately associate that with the artificial intelligence, but because of their filings, they make it into the portfolio.
All right, let's go ahead and leave it there. Thank you so much, Arne Noack from Xtrackers, here today talking about the Critical Technologies Fund and the AI/Big Data Fund. Thank you so much for jumping on here, and we hope to see you here in a future episode. Take care, everyone. This has been ETF Spotlight. We'll see you in the next one.